I'm Peter Gaylord. I'm the CEO of Gaylord and Belinsky Wealth Management. Today I'd like to talk to you about a subject that's of interest to many people, which is why would I hire an investment manager when I can just invest on my own? Many people, of course, are what's referred to as self-directed investors, and they like to use their own E-Trade account or Schwab account or some other brokerage firm to manage their own money. And the question is, if they're doing that, what kind of returns do they typically earn? I have a study here from JP Morgan that we've been looking at, and it's quite interesting. And what it shows is that the average investor working on their own over a 20-year period actually earns a return of just 2.3%. Now, it's hard to believe, but even with the market doing as well as it has in aggregate over many periods over the last 20 years, but that's the cold hard reality. And what I'm going to do now is put the slide in here for a moment. It'll show for 4 seconds. If you want to study it in more detail, go ahead and pause the video for a moment, and you can see the average returns of different asset classes and how average investors do compared to those. After you've had a chance to look at that, go ahead and start the video again, and then I'll be coming back with some more commentary on these returns and the reasons for them. So go ahead and study the slide now, and we'll start again in a moment. Thanks. Hi, welcome back. Well, I hope you found that slide to be of interest. It is pretty shocking when you see the returns being so low for the average investor, just 2.3% from 1993 to 2002. And having studied these numbers, the returns of these different asset classes, which range all the way from 11.2% for REITs down to 2.7% for residential real estate, you might ask yourself, well, why do individual investors do so poorly? And there are a few reasons for it, and I'll go over them now. The first really boils down to emotion. The fact of the matter is that most people are guided by two primary emotions: fear and greed. And there's an old saying that you should never get emotional about money, but unfortunately most people do exactly that when they work on their own. Now, how does that impact their investing? Well, what typically happens is that average investors generally buy high and sell low. And of course, as you know, that's exactly the opposite of what you want to do. Now, why would people behave in such an irrational manner? Well, there's a key reason for it, and that is that most people tend to want to purchase stocks when they feel the market is safe. And when do they think that the market's safe? Well, they think it's safe when they've witnessed a period of extended gains in the market. Well, the problem with that is that generally, when you're guided by that principle, you tend to wait until the market has run up for an extended period of time. And furthermore, many investors at that point tend to dive into the market very heavily and buy a lot of securities. What generally happens then is that they're buying stocks primarily at the end of a big market run-up. Furthermore, the situation's compounded when the market subsequently sells off. When that happens, many investors become fearful. They have a hard time sleeping at night, and their motivation is to just, get out of the market no matter what. And as a result of that, they tend to sell low. Well, the problem here is that if you are in that pattern, you're going to find yourself consistently buying high and selling low. And again, of course, that's exactly the opposite of what you want to do. So now we're going to talk a bit about why you would use a financial advisor. Well, we've seen that the average investor working on their own often has a return of only 2.3%, very poor. And there's a few reasons for this. One is that investing is just in some respects it's difficult. It requires knowledge, it requires that you stay calm and cool, And a lot of people have problems with that. Other people are very capable, very smart, very bright, but they're just very busy. You know, if you're a professional, a manager, a physician, an attorney, or anyone for that matter, you simply don't have time to sit around and watch what the market's doing all day. You've got enough to do in running your own life and your own career that you can't sit around and stay on top of what the market's doing. Well, a financial advisor does exactly that. It's our job to keep an eye on what the market's doing, and so we're going to be able to spend more time doing that. And in doing that, we can synthesize and look at the key drivers of what's going on in the market and communicate that to our client. A few other things. A financial advisor is good at helping you remain dispassionate. When you're panicking and you're feeling emotional and you want to jump in with both feet into the market, or you're getting scared and you want to sell out no matter what, the financial advisor is often going to help you maintain some perspective. You know, 90% of the time, the best thing to do is absolutely nothing. When you want to jump in with both feet or get out of the market, that's the moment when you need to stay calm and cool and not do what your emotions are telling you to do. You've got to use your head and not be guided by that fear and greed that we talked about earlier. The other thing a financial advisor can do is to help you maintain more of a contrarian perspective. And that is when you see opportunities, when the advisor sees opportunities to get into the market, they're often going to counsel you to begin purchasing when you don't feel it's safe to do so. And on the flip side, they're going to be advising you to sell when you want to jump in with both feet. So by using a financial advisor, you can start to do the process which you're supposed to do, which is to buy low and sell high. So, you know, that's the key reason, among the key reasons why you want to work with a financial advisor. Now, Gaylord and Belinsky would love to be your financial advisor. If you'd like to talk more about these subjects or just learn more about investing, you can watch our videos here on YouTube. You can look at our Twitter account at Gaylord Belinsky, or you can just give us a call. If you look in the comments section, you'll find our contact information, or take a look at our website, GaylordBelinsky.com. We've got a lot more information there. We hope you'll take a look at it, and we look forward to speaking with you. Thank you.